Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day. As always, today we're going to be talking about ABBV. Why did I sell? If you've seen the last portfolio update, you're probably asking that. Maybe, I don't know. Maybe you're not interested in that question. But I'll let you guys know straight off the bat, it's not for the reason why you think. It's not because it's a bad company. I will be sharing in greater detail later on in this video. So what is ABBV? ABBV is a drug pharmaceutical company, one of the largest in the world. And by market cap, it's actually pretty respectable. They were a spinoff of Abbott Laboratories. It used to be a giant medical conglomerate where they spun off the pharmaceutical division in ABBV, and with that, some blockbuster drugs. And if you notice, Abbott Laboratories has a far greater price history on Google Finance versus something like ABBV, which doesn't really have all that much. If you actually max it out, which I'll show you guys right here, it actually only goes to 2012, which is around the time they got spun off. And Abbott Laboratories, the parent company, continued on its other direction. ABBV, again, being the medical devices company, something not too dissimilar to what Johnson & Johnson is planning on doing potentially in the future, having the pharmaceutical division and separating those liabilities from the medical devices business, which is actually a very attractive business, okay? So with that being said, what does ABBV focus on? Well, they have a couple blockbuster drugs. You might have heard of them, Humira, which is one of the best-selling drugs on this planet in history, and it actually beat out Lipitor, which used to be one of the best-selling drugs on this planet. Now, that being said, ABBV has some key risks here, right, on the surface. You might say, well, what year is it? It's 2023, and that is the expiration of the Humira patent in the United States. It already expired in Europe. But since then, Humira patents, there's about 150 ones on just like the manufacturing process that ABBV actually owns. And there was a risk that the lawyers who were suing this on an antitrust basis would have won. I think they actually just lost, or a little bit long ago they just lost, which does actually extend the protections for Humira in a variety of other ways, because the judge deemed that just because they have a bunch of patents on Humira as far as the manufacturing process, etc., doesn't necessarily break antitrust law. So ABBV, for the time being, has a bit more runway to grow their pipeline, grow their portfolio. And with that being said, that's a good segue into why I bought. So my acquisition of ABBV back in 2019 was one where I saw that the market was heavily discounting the company just because they were acquiring Allergan. And if you guys haven't been invested in the markets for that long, I will kind of fill you in on what happened. ABBV wanted to buy Allergan, which is the owner of Botox. Might have heard of Botox. And they wanted to acquire the pipeline for their neuroscience division so that they could grow their pipeline. Again, that's one way these pharmaceutical companies do grow. So a lot of people like to invest in the bigger players because the bigger players, let's say they have a ton of cash to throw around and they can investigate and find other pipelines that are attractive on your behalf because let's say you're maybe not an expert. And the smaller companies is typically where I'd find the people who are subject matter experts in the pharmacology space, maybe investing to try to take a gander on a particular stock. Now, these one-hit wonder stocks, they're extremely risky. Again, that's why most people like to stick to the large conglomerates. And over time, on a risk-adjusted basis, that's probably the better play. So AbbVie being one of them, you have other ones like Merck, Johnson & Johnson. Well, Johnson & Johnson is a mega conglomerate with a consumer products division, a medical device division, and the pharmaceutical division. Focusing on just the pharmaceuticals, the other ones should suffice, as well as Pfizer as well. So going back, Allergan, great acquisition. In hindsight, I thought the market was mispricing it, and not too dissimilar to the strategy I typically like to deploy. You guys have seen it over the course of this YouTube channel, how I like to look at stocks, how I like to look at companies, and when is it that I like to buy the trigger. Really trying to distinguish between a value trap and a non-value trap is really, I feel like it's not too difficult, but it can be. It very much can be. So, for example, this is no Smith & Wesson or something like that. This is kind of a little bit more, nuanced. So we'll get into the reason why I sold in just a second. Before we go, I just want to show you guys the pipeline and show you guys, and you guys can pause at any moment, but this is the neuroscience division they acquired from Allergan. They have Botox, you see right there. Now, there's a bunch of different things that they can patent for a drug. They can also patent for a specific use case, and even the manufacturing techniques like I told you. So this is a very different type of company from something like, let's say, a Teva Pharmaceuticals, which is the generics drug business. I'm using Teva and not Viatris because Viatris on Google Finance doesn't have as long of a price history because they are the merger between Mylan and Upjohn, which was Pfizer's generics business. So Keep that in mind. Teva Pharmaceuticals, you can see the massive overexuberance in the generics drug market. You're not going to see the same level of margins. I just want to distinguish these two types of companies. Both sell drugs. One has patents and basically produces and investigates and has a lot of R&D, and then uses that to kind of have the dominance and monopoly over that market, over that specific drug and that treatment for as long as they can. And these guys are the ones that come in after that expires and they develop the drugs, the generics drugs, and that's when the market kind of takes over and the drug prices come down. So yeah, you got to distinguish between the two. One is definitely perhaps more easy to invest than another, but overall, both are involved in the drugs business. So kind of going off of the patent cliff that's happening in 2023, I think that they are a little bit more protected. And when you take that into account in terms of the valuation, AbbVie is not terribly valued here. It's actually right around fair value, I'd assume. So why did I sell? Well, I already told you it's not because it's a bad business. Not at all. I think that AbbVie is a fantastic drug company. I think that what they have going forward as a pipeline is actually pretty good. And from what I've gauged from subject matter experts in this field, it is pretty good. So why did I sell? Well, I think that the market right now is not discounting AbbVie whatsoever. I think that the market is kind of, okay with AbbVie where they're at. It knows about the patent cliff and it knows about all the protections they have. It knows all these things and it's not exaggerating the bullishness and it's not exaggerating the bearishness. I simply think that my money could go elsewhere and be deployed elsewhere for a greater return. And that is why I sold. Now, if you're looking at AbbVie from a dividend growth perspective, I want to tell you that the management has done a fantastic job at returning capital to you, the shareholder. Let me just show you AbbVie's dividend over a long period of time. You can see that they've grown the dividend for about 9 years and an average growth rate of 16.92%. Since I was buying AbbVie, that was the tail end of the growth. You could see they still did grow it from $4.28 to $5.64. But you can see they've done a fantastic job at really returning capital to shareholders, so it's been beloved by the dividend growth community. And still, according to just the earnings payout ratio, which is a simple metric to kind of gauge the safety of a dividend, it is sitting at 41.78%. So even if the Humira sales start to decline, they still got a nice leeway. And what we're seeing is the rest of the pipeline is starting to pick up the slack for Humira. Okay, so all in all, great company. And I think it's a good company / great company at a not so good price, but not the worst price. Comparable to some other drug companies, you might find them a little bit cheaper, but for good reason. AbbVie's management team has proven themselves over a longer period of time versus some of these other drug manufacturers or drug companies. So I think AbbVie, again, in their space, they're fantastic. They're absolutely fantastic. They're not at the level of Johnson & Johnson, but I don't think that's fair to compare because Johnson & Johnson has the consumer products division, the medical device division, which is a very good business, again, and the pharmaceutical division. Once the split happens in Johnson & Johnson, I think that they're going to be more comparable, but for now, it's not really too fair. Now, AbbVie, compared to some peers, like I said, is trading at a premium. So let me know down in the comments section below. How do you guys feel about this company? Is this a company you're looking to add to your portfolio? Are you kind of staying away from it right now? Is it already in your portfolio? And give me some of the reasons as to why. Otherwise, thank you guys so much for watching. And if you enjoyed this video, feel free to like, share, and subscribe to the channel.